Thanks for joining today. We're going to go really quick because I have a lot of valuable information that I know can help you. There's so many real estate investors that don't like the stock market, and I think it's a major misconception. For roughly the next half hour, I'm going to explain how I've used the market to make millions of dollars. We're going to cover 5 key topics because I want to show you how stocks are just like investment properties. I want to teach you how you could take advantage of opportunities, the importance of diversification, and how I use due diligence for my stocks the same way that we do for real estate. We're also going to talk about how I create cash flow in the market just by clicking some buttons. No tenants, no property managers, just some clicking of buttons. I mean, doesn't that sound good to you? I think so. You might be saying, who is this guy? Why should I even listen to him? So let me just tell you quickly. My name's Justin, and I've flipped houses for the last 5 years. I realize not a long time, right? I've been a private money lender for 8 years. I've invested in syndications, and I have some commercial real estate. But I've invested in the stock market for the last 27 years. It's a little bit more than that, to be honest with you. But it's funny. Every time I say that, people think I'm 30, and they're like, "Did you start when you were 3?" No, no, no. I started investing when I was 17. Long story short, I had to get my mom to set up a custodian account for me because I couldn't have my own account until I was like 19 in the state of Alabama. Totally different shares. I started investing when I was 17. I've owned shares of Google since it went IPO back in 2004. I've been an active trader for 20 years. I've been part of the tech boom. I remember in the 90s when JDSU stood for Just Don't Sell Us, and it went from like 300 to like 3 cents. Yeah, I rode that. I've seen that. I've been part of 2008. I've traded through COVID. I've seen good markets. I've seen scary markets. I've learned how to manage emotions. I've learned about mindset, and I think you need to learn the same thing. It's so similar. Real estate and stocks are so similar. During COVID, I made more money in the market than I made in my W2 job using simple strategies that I'm talking about today. Now I'm giving back. I've created Good Kids Trading. This webinar is not going to be like some of the webinars where you have this crazy sales pitch at the end. I'm going to ask you for $5,000. Listen, I've been there. I've been on those webinars. That's not what this is. This is the only sales pitch you're going to get today. I'd love for you to visit goodkidstrading.com. I built a community to help teach you the things that I know. I write a weekly blog. I write a weekly newsletter. If you don't want to be that active, just read those. I have an active Discord. I post every day in Discord. It's great information. Um, all I'm asking, visit the website, join our Discord if you're enjoying this webinar. Maybe you set up a call with me later on, maybe you don't. But that's it. Let's jump right in to what my goal is for you today. I want to teach you the stock market. I want to teach you how the stock market and real estate are not that different. I want you to leave today with a better understanding about stocks so you can make smart decisions about investing and generating passive income, because if I can do this, I promise you can do this too. I want to start with some myths because I hear this. Like, I love to go to real estate meetups. I'll look you straight in the eye. And when, hi, I'm Justin. And the first question out of anyone's mouth, doesn't matter what kind of meetup you're going to, it's like, well, what do you do, Justin? And I'll look you straight in the eye and I'll go, I invest in the stock market. And I'm going to look at your face because most real estate investors, a lot of people do not like the stock market. So let's talk about some of the myths. The stock market is far too risky. I don't have time to learn about stocks. The stock market is rigged. It's like a casino. Justin, it's like a casino. Do you know that? I'm like, yeah, okay. I'm not smart enough to trade. I'm not smart enough to trade the stock market. So I just want to tell you, anything in life has risks. If you don't know what you're doing, yeah, the stock market's risky. If you don't know what you're doing, real estate's risky. If you don't know what you're doing, your day job can be risky. I mean, I don't know what you do for a day job, but it can be, right? Uh, I don't have time to learn about stocks. I'll tell you, I trade for 30 minutes a day. I don't have to trade every day, and the stock market is my main source of income. It's really how I live the life of freedom that I have today. So 30 minutes a day. Do you have 30 minutes a day? Yes, I've been doing this a while. I know it's going to take a little bit of a learning curve to get to where I am today, but I trade for 30 minutes a day. You can tell me the stock market is rigged, it's like a casino, and I will respond to you, it can be. Yeah. Yeah, it could be like a casino if you want it to be, or it can be really passive, really boring, and you can make money. I'm not that smart. Listen, I've had learning disabilities all my life. I still use there's a calculator on my desk. I still do basic math functions with a calculator. If I can do this, I promise you can do this too. So, if those are some of the misconceptions or myths that you think you have in your mind, let's get through them today. I promise. If I can do it, you can do it. You look at all these properties that I have on the screen and you realize they're assets. The houses, the condos, the apartments, whatever real estate class you like. Maybe you don't own real estate, whatever. You understand these are assets, right? I would like to tell you that owning good quality companies are assets too. I own all 5 of these. I've owned all 5 of these for over 10 years. Google, Amazon, Microsoft, Walmart. These are just some of the stocks in my portfolio. I consider these the same way that I consider owning a real estate property. And I'll tell you why. They appreciate over time, and I am able to use options to cash flow them. So you can't just buy anything. You need diversification. There is a right way, there is a wrong way. You're never going to not lose sometimes in investments. It's the same way in real estate. You want to mitigate your losses, don't let them get out of control, and you want to let your winners run and enjoy your investments. Remember, stocks are assets too. Every real estate investor that I talk to who hates the stock market, they have a portfolio that looks one of 2 ways. At the top, they'll own all real estate companies. So they'll have like DR Horton, Toll Brothers, they'll have EXPI, they'll have Income Realty, like REITs. So as the real estate does good, their stocks do good. As real estate does bad, their stocks do bad. They're like, the market just trades like my portfolio, except for when my real estate portfolio goes up, my stocks don't go up as much. Yeah, because you have more risk in your real estate, right, than you do in a stock. So, or these real estate investors who are normally so conservative, conservative guys and girls, they are so careful about the properties they buy. They do all this underwriting. They make sure everything looks great. And you look at their stock portfolio, and they have penny stocks, or they have these pure speculative names because they're trying to take $500 and they're trying to turn it into 10,000 tomorrow. And you can do that. Like, people do that. That's not what you're going to get from myself or Good Kids Trading, because I know that graphic is terrible with the guy with riding a bull, but that's what their portfolio looks like. I'm like, you are so conservative in real estate, and then you have a stock portfolio that looks like this. So trying to get rich quick, sticking to only what you know. Yeah, I understand why you don't like the stock market if that's the way that you think about it. But let's not think about it that way. Let's look at an example. See this house? Like, would you overpay for a rundown house? Like, would you pay the after renovation value for this house today as if it were already refurbished, if it was already flipped, if it's already fixed? Okay. Listen, I know this example, maybe it's a little too extreme, right? So new flippers, they go in and they buy a house that looks like this. This is still extreme, I get it. But new flippers, they go in and they buy a house that looks like this. They'll pay full price. Like, here, take all my money. I'm gonna make thousands of dollars. Okay, maybe that's too extreme too, right? But they'll take a house that needs renovations. A flipper doesn't have a lot of experience. They'll take a house that needs a lot of renovations, and they'll pay whatever is the asking price, not realizing what money they need to put in to get the value. And they might get lucky and they might make a profit if the market's in their favor. Maybe they don't make a profit, but if they make a profit on that first deal and they pay full price, they pay more than an experienced flipper would pay, they're like, I got this down. And you know what? Instead of doing 1 deal, I'm going to do 2 deals. And instead of doing 2 deals, I'm going to do 5 deals. And before you know it, they start looking like this teeter-totter where the money's over here and you're up here all high and mighty. And you're just like, I can't lose. And far too many investors do this in the stock market, and they do this in real estate. Why would I flip one house when I can flip 10? Why would I sell one put option when I can sell 10 put options? You know what? I need 100 doors instead of 20 doors. I know stock ABC is going to go, it's going to triple overnight. I'm going to put all my money in that one stock. And I'll tell you why you shouldn't do this. It's on the next slide. Something called a margin call on the stock market. When your stock price goes straight down, and you don't have the money to cover it, you're going to get a margin call. The broker is going to sell that for you automatically. And in real estate, it's called a short sale. It's called a fire sale. It's called a foreclosure. And I'll tell you, over leverage in a bad market sucks. When you can't pay your bills, when you don't know where the money's coming from to put food on your table, it sucks. Yeah, the profits are great when you over leverage and you're doing good. But when the market goes down, things get really tough. So you remember that first example that I showed you, this beautiful house right here? I'm not going to pay full price for this house. I'm looking to pick up this house for pennies. And I think most experienced investors would do the same thing. The most money is made when others are fearful. I want to show you an example because if you've been around real estate a while, when people start talking about a crisis in the market, you realize that's when you find opportunity. When there's a bull market and you're having to put in escalation clauses, I'll pay 5,000 over the best offer that you receive, there's not a lot of profit on the bones for you. But when people start mentioning a housing crisis and people start getting underwater on their loans and they have way more houses than they can afford, the profit margins get better, right? You get more opportunity. You find deals. And it's the same thing with stocks. You're like, how do I know what you're talking about? Like, I can see real estate. Well, you can see stocks too. And it's just not that different. I want to look at a real life example from just last year. Buying the best of breed into panic and fear is how I've made so much money. I sit back, I wait for opportunities. You can do this too. It's just like that new flipper we talked about earlier. If you want to buy high and you want to sell higher, that's great. It's not my style. I don't do good with buy high, sell higher. I don't do well with that. But I love when people start to panic. And I don't mean this in a bad way. I've been that person who panicked before. I've done it. I understand. But when you start to panic, or when that person starts to panic, that's when the good deals start showing up. So it's important to not buy blindly. It's important to not buy or trade on emotions. So I don't know if you heard last year around April, we had FRC, we had Silicon Valley Bank. They both did what we talked about. They started over leveraging, right? Have you heard of these two banks? I don't know. They went out of business now, unfortunately. But you know, SVB was trading. Look, it hit 700 at once. Now it's trading for 6 cents. FRC, First Republic Bank, it was 200. It's trading at 3 cents now. Unfortunately, these banks, they took on too much risk. They didn't hedge correctly. So we can use that as lessons for ourselves. Their lack of due diligence and foresight is a good example for us, but it caused a cascade of fear in the entire market. And it even brought down the good banks. I want you to look at these two stock charts. FRC is on the left, JP Morgan is on the right. I believe JP Morgan is the best bank in the world. I know that's a huge statement to say, but I was scooping up JP Morgan right. See if I can use my laser pointer right here. I bought JP Morgan right here. I sold some not too long ago. I still own a lot, but I sold some up here at 200. So I bought it at 130 and I sold it at 200. I was shouting from the rooftop for all the good kids to buy JP Morgan. I'm not even talking about other trades. This one stock ticker, JP Morgan, I made tens of thousands of dollars in this one trade. And you can do this too. You might not be able to put that much money in. It just depends on the size of your account. But this is another example of why I think you should join our Discord. I think you should join Good Kids Trading. You can scan this QR code on the screen. It's going to take you to this URL that I have right here for you, goodkidstrading.com/join. I don't know what you're waiting for. It's a free community. I'm trying to show you some of the things that I have learned. So that's my sales pitch again. Gosh, I hope it's not too hard for you. There's not going to be a $5,000 to learn some of the things that we're going to talk about today. Like, even if you bought a couple shares of JP Morgan, that would be a nice return on your investment. And you can take advantage when others are fearful. Instead of being the one who's fearful and trying to sell all your stock, you can be the one buying it. You can be in the right position to have the right mindset to look for these opportunities. Another great thing about JP Morgan is they pay dividends. And I am known as a boring dividend investor. I love dividends. Dividends are the most passive income I've ever seen in my entire life. I don't have to work for the company. I really don't have to know what the company does, and they still pay me a dividend. They pay me just for owning part of their company without any expectations. I did a webinar on dividend stocks. You can scan the QR code here. You can go to my YouTube channel, Good Kids Trading. This same webinar will be on Good Kids Trading YouTube, so you can check it out there. But I told you in this webinar, I told you exactly how I buy dividend stocks. I told you what I look for in the stock. I even told you where to sell your dividend stocks. And the best thing of all is I told you how you can double and triple your dividend yield using options if you were able to trade 100 shares of a dividend company. So check out this webinar. It's a little bit longer than this webinar today. We're 16 minutes in, so we're halfway through. I'm going to have to speed this up a little bit. I love to buy low, sell high. How do you do that, Justin? How do you buy low and sell high? I use support and resistance on a weekly chart. If you don't know what that means, I get it. But just look here at, you buy low, sell high. Oh, wait, it came back down. Buy low, sell high. What happens when it keeps going? I'll show you in a few minutes when we talk about NVIDIA. But this is what I like to do. I like to use weekly support and resistance. If you don't understand that, check out the blog, check out the Discord. We can talk about it later. I have one strategy where you see this little blue line, it's called a moving average. This red line's a moving average. I have a strategy where I buy off the blue line. Are you telling me, Justin, that your strategy is as simple as you just buy some shares every time it hits a blue line? Yeah, I'm telling you that. I know this chart goes back to 2019 and it's 2024 now. I've traded Apple 7 times. I bought it down here. I bought more here. It dipped here. See these purple lines? They all mean something. These are my support and resistance. I sold some here. I sold some here. I sold some here. I actually sold everything here, to be honest with you, because it went from 140 to 170. Look, it dipped back down. Bought it. Where do you think I sold it? At the blue line. Where did I buy it? At the blue line. At the blue line. Where did I sell it? At the blue line. Where did I buy more? At the blue line. Your trading can be that simple if you invest in good companies. And you're like, Justin, how do I know what a good company is? Let's talk about it. We do due diligence. Any investing is risky if you have no idea what you're doing. If you're trying to get rich quick, yeah, you're going to be in for a really bumpy, rough ride. But if you have realistic expectations, if you understand, can I get a home appraisal on my stocks? Can I get home inspections? I want to know, does my stock have a foundation? Do you want to buy a house without a foundation? I don't. Does the stock have a good foundation? What's a fair price? Let's look at some comps and what is my possible return on investment before I even enter the trade. If you start thinking about stocks the way that you think about real estate and you use these key principles, you're going to have major success in the market. You're not going to win them all. No one is going to win them all. If you have a coach, if you have a strategy, somebody's trying to sell you that never loses, you should just click X as fast as possible and get out of there, because nothing wins all the time. But if you set up yourself using due diligence, Just like in real estate, you might get a house or two that doesn't do very well, but you're going to get some really nice home runs. I love to talk about home appraisals because every time I talk to a real estate investor who is in a tough market, they always tell me the same thing. The market's down today, but it's going to come back. And I talk to them about stocks, and they're like, oh, I don't know. The market's down. I don't think I want to buy this stock. What if it keeps going down? Remember, stocks are assets. If you buy shares, that's an asset. They don't expire. If you buy options, that's a different story. Options expire. I'm not encouraging you to go buy call options and try to make a huge return. I'm encouraging you to buy shares like you buy real estate investments. You get this home appraisal when you want to sell the house. You know, home valuations are really more volatile than you probably realize. And maybe you see a comp sale nearby, so you kind of have a good idea of what your property is worth. But property values move up and down. You just don't know it because you're not getting a home appraisal every single time. You're getting a home appraisal if you want to refinance. You're getting a home appraisal if you want to sell. You're not getting one every day. Who would? Why would you pay somebody? But the thing about the stock market is pretty much 24/7. You know where your profit and losses are. You see, hey, the market's down 2,000 today. Oh, it's down 7%. It's on all the headlines too, because they love to talk about when the market's down. Oh, people are losing. We just hit all-time highs, and they're like, oh, the market's down today. I'm like, we just hit all-time highs. So I encourage all my students to hide their profit and loss. I know most of them don't. I don't look at my profit and loss, and even if I do, it doesn't mean what it means to other people because I've taken the emotion out. I've seen my account have massive drawdowns. I understand. So I just want you to realize home appraisals, stock appraisals are 24/7. So think about this. When your home value is down and you're like, I know it's coming back, your stocks are going to come back if you pick good ones. And you're like, you keep talking about good ones. How do I know? We're going to get there. Look at these three lines. I pretty much covered what we just talked about on this slide in the words, but all three of these very crude drawings that I took the time to draw, they're all winners. It just took different paths to get there. The top line, we'd all love all of our homes, all of our investment homes, all of our stock trades to do like that top line. Just keep stair stepping up the entire time, making money the entire time. Doesn't always happen. You're going to have those investments like that bottom one that just the bottom drops out. As soon as you buy it, I buy it and then the bottom drops out. And you're like, what is going on? But it came back, right? It came back after enough time. So it's all about your perspective. Eventually, good companies come back. Eventually, good things happen. Not all the time. Sometimes companies go out of business. So it's important that you diversify. But if you invest in companies and real estate in good areas that you think have a very high likelihood of improving, you're setting yourself up for success. It might just look different. All three of those lines went up. They just look different, right? You remember when I talked about buying and selling and what happens when you sell too early? Well, let's talk about NVIDIA. Everybody's talking about NVIDIA, right? Buying and holding stock is really, really boring. But if you buy the right ones and you let them compound over time, truly amazing things happen in the stock market. If you invested $5,000 in NVIDIA 24 years ago, today it would be worth $4.7 million. Let me say that again. If you invested $5,000 in NVIDIA 24 years ago, it would be worth $4.7 million today. I mean, that's pretty nice, right? And you can see, like, this is not my tweet. I saw this on Twitter, and I just took a screenshot because I love this chart. I love this graph, and then I don't love this chart quite as much because I own NVIDIA. I've had it since 2020 actually, and I sold my NVIDIA right here at 480, and it's like 1,000 now. So what happened here? I missed out on it, but I did make money from here to here, and that's part of my strategy. I don't always make as much as I could because I have strategies where I look for appreciation and I look for cash flow. So you can set up your portfolio multiple ways. Will you catch all the stocks that look like this? Absolutely not. Will you catch a lot of stocks that look like this? I made a huge return on my NVIDIA. A huge return. It was great. I don't worry about missing out. This stock is going to come back to this red line. It will. I don't know when, but you can bet I'll be watching, and you should too. We talk about home inspections. I know that some investors, they don't get home inspections, but they do the home inspections themselves, or they have a good idea of what the actual ARV is, the after renovation value, or if you're holding it long term, you kind of know basically what the house is worth now. What does it need if it's going to be long term? But how do you know if a stock is good? Like either you get the inspection or you do it yourself for the home, but for stocks, it's not quite as hard. I don't need to hire an inspector. I don't need to go on site. I don't need to depend on anyone else. I can use stock screeners. So things I look at in my fundamental analysis, that means like looking at the actual company itself, is I want to make sure that the price to earnings, the forward looking PE, I want to know what's going on with the industry. Is the company making money, net income, etc. I use two different products, FinViz and KoiFin. And we have 10 minutes, so this is going to be great. Um, Income, dividend, price to earnings, they're all right here. See it? So you can kind of see, does this company make money? What's their price to sales? How much earnings per share do they have? What's the return on investment? Profit margins. This is Procter & Gamble. It's a boring company. It has a PE of 26. There's different kinds of companies. Check out FinViz. It's free. KoiFin does cost. I don't pay for it, but you can if you need to. You can get everything you need, but you need to diversify. And I covered this in the dividend webinar as well, but there's growth stocks and there's value stocks. And I think you have room for both. You just need to understand that with growth stocks, you're paying for the expected growth. So if the company stops growing, the stock's going to drop. These are usually younger companies from the, 20 years or newer. And this came from the Motley Fool. I think this is a great slide. Value stocks, they're more focused on income. They're companies that have been around for a while. We talked about this in the dividend webinar. I'm not going to talk about it too much more now, but just know there's two different kinds. So when you go and you look at some comps, you don't want to compare a growth stock and a value stock side by side. You want to understand is you don't compare commercial real estate with a mobile home park. You don't put them next to each other. Single family with self-storage. You don't stick them side by side and go, these are the numbers. You understand there's difference. So it's the same way with real estate that's with stocks. Don't compare likes to likes. Just because one's a banana and one's an orange and they're both fruit, you don't compare them exactly the same. They're a little different. So understand that. You can use KoiFin for this too. Tesla is a growth stock. Nvidia is a growth stock. They're different sectors. They have different PEs. Look at the PE of Nvidia, 73. The PE of Tesla is 43. Look at the price to earnings. They're different. You understand you're comparing two different things side by side. Just because they're growth stocks doesn't mean they're exactly the same. So these are some of the key factors that I look at. Once again, you can do the same thing. You just start comparing likes to likes. This is what KoiFin looks like. It has some different screens, but it's the same information, just presented a different way. The stock market doesn't have to be a casino. It doesn't. And it can be. You can use gambling in the stock market. You can trade with emotions instead of logic. And fear is going to cause you to sell to me at the wrong time. When you have had too much, I'm going to buy whatever you bought for pennies on the dollar, and I'm going to hold it, and I am going to get my appreciation just like you do in real estate. I don't want you to be the person who buys at the top, gets scared, and sells it to me for pennies on the dollar. I don't want you to do that in real estate. I don't want you to do that in stocks. I don't want you to blame the market for things that are just common sense. Please don't. And I want to talk about leverage, and I want to talk about other people's money, because other people's money is great in the stock market. Other people's money is great in real estate. It sucks in the stock market. These people who are talking about funded accounts, I give you $5,000 and I trade $2 million in a portfolio, is awful. I've seen people just lose. They just pay thousands and thousands of dollars to be $1 million account trader when they could use those thousands of dollars to buy a good quality company and hold it. $5,000 in Nvidia in 20 years made $4 million. $5,000 to trade $1 million account and you blow it up, you have nothing. Think about that. Other people's money in real estate is awesome. Other people's money in the stock market, not awesome. Let's talk about this later. I love to use cash flow. I talked about this a little while, and there's just not going to be enough time today. But I sell covered calls. I sell puts. These are the most simple strategies there are out there. I'm not a smart guy. Cover calls are basically just renting out my shares. I have a graph coming up in a minute. We'll talk about it. I'm just renting out my shares. If the stock goes up, I'll give them to you at a much higher price. It's like leasing out my property, lease to own. Selling puts, I'll buy that company at a 30% discount. If it doesn't get there, I'll just keep that money you gave me. I love it. It's the most passive income I know of. Um, I love to buy dividends, the wheel strategy. All of this is in Good Kids Trading. It's all in Good Kids Trading. All right, let's take a look at insurance because people go, Justin, you're going to lose everything in the stock market. I can buy insurance. You can buy insurance on your stock portfolio the same way you do on your real estate. Same thing. If your house doesn't catch on fire and you paid the homeowners, you're not going to complain. If I buy some protection on my stocks and it expires worthless, I still made money in the market, right? So you can buy insurance. We'll talk about this soon. I just want you to understand you can insure your positions the same way you insure your real estate. These are the covered calls. I know this graph is super confusing, but General Mills sell it at 73. They're going to pay me $40 today. This is what it looks like on the chart, right? So if I sell my General Mills up here, it's trading down here. I got paid $40 to sell a stock that I bought off the blue line at 63. I'll sell it at 75. You pay me $40. If it doesn't happen, it doesn't happen. I'm fine with that. Would you be fine with that? It's cash flow. I don't have tenants. I don't have I don't have insurance. I can buy insurance. I don't have property managers. I love that. I can hedge my positions the same way that I was telling you earlier. This is very complicated. I understand. If you don't understand the stock market, you're not going to understand this just yet. That's fine. But I'll sell it up here. I'll sell it here. I cannot lose. If I bought it off the blue line and I sell it here and I sell it here, if I sell it at 70 or I sell it at 75 and I bought it at 60, I'm going to make money. You can make money in the stock market. I cannot lose. This is a lot to cover in 30 minutes. This is the QR code. Join Good Kids Trading. There's really no catches here. I just want you to learn what I know. goodkidstrading.com/join. That's the QR code. Takes you exactly to where I'm telling you. Quickly, we're going to review. I think shares of stock are just like investment properties. I think you should not buy a D-class property and pay an A-class price. There's A-class, B-class, C-class, D-class, real estate, and stocks. Know the difference. Don't overpay for stocks and tell me the stock market's rigged. Do a little research, get a little education. I've owned shares of Google, Amazon, Costco, Microsoft, and Walmart for 20 years, and I've rented out the shares and consistently built cash flow over and over. I can do it weekly. I can do it monthly. I don't even have to do it on all my shares. I can just do it on part. Not only have my shares appreciated over the last 20 years, I've pulled in regular income, just like I told you. And I think that getting appreciation and cash flow on stocks is the way to go. And it can be boring. It doesn't have to be exciting. I'm not getting the depreciation that we get from real estate. That's why you need both. You need real estate and you need stocks. Stocks are passive. They get the cash flow that every single real estate investor I know wants so bad. And it's a few click of the buttons. That's all it is. I know the market can be scary. I've been doing this for 25 years. I was a liquid millionaire by 40, and it was all because of the stock market. I wasn't even in real estate until I became a millionaire. I did it backwards. And I know how it feels. I know it can be scary. I know people need help one-on-one. Because I see it every day. I talk to multiple people every day. I coach students every day, and I understand the stock market is scary. It can be tough. And you don't even know where to start. That QR code takes you to my Calendly. You can see it right there, calendly.com/goodkidstrading. Set up a 30-minute call with me. Let's talk about the market. Let's see what we can do to start earning passive income for you in the stock market using some of the same principles that I talked about today and all the ones that I talk about in the blog and on Discord every single day. Every day I talk about this. I talk to people just like you. I know how to do this because I've done it. I've seen good markets, I've seen bad markets. I've been through 2008, I've been through COVID, I've been through the tech boom. So, stocks are my passion and my expertise. And I know you can find the freedom that I've found in the stock market. So, that's all I have for you today. I hope you enjoyed this. I hope you join Good Kids Trading, and we'll talk again real soon. Thanks, everybody.